First off, talk to me about Korea's implementation of this short-selling ban. I mean, does this strategy really work?
Well, I'll be very frank. My position is that short selling is obstructing the market. It unbalances the market because investors should be equally able to buy or sell shares regardless what they're holding. I don't think it stops the market from going down, frankly. And certainly there are plenty of people who believe that it takes liquidity out of the market. And, of course, liquidity is vital for market functioning and for market pricing. But I think what's interesting is that although short selling is banned per se, if an investor has a bearish view on the Korean stock market, he is actually still able to take a short position indirectly through the equity-linked warrants market. And I think that at least allows a much better balanced market. In fact, the ELW market in Korea has been thriving because, in truth, it does provide a much more balanced approach and a much less dangerous approach, arguably, to investing in the stock market.
Okay, well, what about who's doing the short selling, James? Because according to the FSC, foreigners and institutions are selling about 96% of the total short selling transactions, or involved in 96%. Is that what they're trying to protect against as well, just foreigners coming into the market to, I guess, bring declines?
I'm not sure that foreigners really have the time to come to Korea just for the purposes of short selling and pushing down the stock market. The fundamentals of Korea are very sound. However, it's clear that there's been an awful lot of foreign capital that was in the Korean market that needed to go home, and that's basically, independently of Korea, that's driven, of course, by whatever liquidity needs they may have in their home country. The whole European banking instability, I think, has been driving a lot of that. And as you know, when investors are investing, especially if they're on margin, the slightest downturn can cause them to have to cover those margin calls. And the margin calls may be in Europe, but they may need to sell their shares in Seoul to generate the cash. And that's had a massive effect not only on the stock market, but also on the FX rate, the currency exchange market, as those dollars have needed to go back home and take care of distress somewhere else in the global financial system.
Okay, well, James, I know you primarily look at Korea, but banning of short selling is not a new practice in Korea. They've done that before, including 2008. But what about a new market like Hong Kong? We have a brokers group here in the city calling for a ban on short selling, as we have about $12 trillion being wiped out from global equities. Do you think for a new market, untested market like Hong Kong, this could actually be implemented, or is it just pretty much a 0% chance of that happening?
Well, it's an interesting thing for me to be observing because, first of all, the call is coming from brokers, and normally it's brokers actually who would encourage keeping a more balanced market, the ability to buy and sell in either direction. Secondly, I can't see where it's going to have an effect on stopping the market declines. Trying to stem a flooding river is a foolish practice. You will often get swept away in the process. And if money needs to go out of Hong Kong's stock market, I'm afraid you just have to let it. But one day those flows out will stop, and then the market will start to recover. And when things are peaceful elsewhere, those investors will come back, and you'll get the reverse effect. So trying to manage that is, frankly, not something I could recommend anybody to do. And I don't think I hope Hong Kong will not be foolish enough to try and get in the way of it.
Okay, James, one more question for you. I'm going to tap into your knowledge as the former head of global strategy at Franklin Templeton. But as an investor, if you had cash to invest right now, what would you be doing with it?
Well, it would depend whether I'm carrying dollars or won, but let's say I'm carrying won. I would certainly be watching very closely the buying opportunities in the Korean stock market. If I had dollars, I might be coming into the won market because, frankly, I think the won is oversold. I think the exchange rate is too far down, and because you watch the volatility on the Korean foreign exchange market, I think there's opportunities for upside. But again, it depends when you judge that the storm clouds will clear elsewhere in the world, and that's what you're really betting on, I think, in any market at the moment today in the world.